Okay, here we are again on the practice problems. This is number 5, and again, this is all just, continued repetition of the idea that assets and liabilities have to equal equity, right? And so I'm not gonna, run through how to solve this one, because you should use these same layouts from the other problems that I showed you to just calculate the result of any changes on the accounting equation. All right, so just make it so that it always balances. Use your check my works. So that's number 5 over here, right? It's basically the only difference between number 5 and the previous ones is the way that the questions are worded and laid out. And one of the things that that people find hard, I understand that people do find it hard in accounting classes, is extracting information out of all these weird word problems, right? That none of them look the same. And so that's why I'm doing like literally the same problem over and over and over again with a question asked in different ways, so that you will become, sort of more fluent in that, so that it isn't quite as much of a struggle to extract this information and translate it into a logical format that you can actually solve. And of course, using Excel to do it just makes it so much easier. Okay, so that's number 5. Now we jump to number 10 here. So now we get into the transaction analysis. And so this is a kind of Cengage problem where you're given a drop-down menu. Right, so what I would suggest, right, don't just keep checking your work until you get it right. Right, what I would suggest that you do, here, I'll get this out of the way. Right, so for these transactions, okay, so we have received cash and issued stock. Okay, so this is, you want to say asset, liability, or equity. You want to think about what that is, right? So cash is an asset, and stock is an equity account. And then the next thing you need to think about it, was it increase or decrease? Right, so we received cash, right? So the asset was going to increase. Okay, and we issued stock. That means our equity account increased as well. Okay, so over here then, once you think through what the transaction is, right? We received cash in exchange for stock. Once you think it through in this context, was it an asset, a liability, or an equity account? And was it an increase or decrease? Once you've thought it through, then go over here and pick. So this was an increase in an asset and an increase in equity. Okay, so we can check that. Yep, that was right. Okay, that was number 10. You just go through all the rest of these, think through them again. Okay, number 13. 4 different companies, Sierra, Tango, Yankee, and Zulu, show the same balance sheet at the beginning and the end of a year. These data, exclusive of the amount of stockholders' equity, are summarized as follows. All right, I can hear your eyes rolling and your brain's getting confused from here. Right, they're just using these situations with these different ridiculous company names, just to mix it up a little bit, right? This is right back to the accounting equation, only in this case, it's just applying the change in stockholders' equity, right? So let's go ahead and set up our same system over here. So we have assets, we have liabilities, and we have equity, and we have beginning, and we have change, and we have end. Okay, so our beginning assets were 490. Our beginning liabilities were 175. So we'll just fill in what we know. Okay, so now we know, therefore, that our equity is going to be the difference. And I can copy this equation. Okay, so we know what the equity was. And so therefore, right, we know what the difference in equity was. Okay, so that's the key to this. You see how they say first to determine the amount of increase or decrease in stockholders' equity during the year. Okay, so let's make that blue. Okay, so the change is we have increased our stockholders' equity by $161,000. Okay, so where did that increase come from? How do you increase stockholders' equity? Well, remember that equity is retained earnings plus shareholder, we'll call it shareholder investment or stock. Okay, and retained earnings is net income, profit, less dividends. Okay, so we had a change in equity of $160,000 over the year, increase. Where did it come from? Well, in the case of this Sierra, we didn't issue any more stock and we didn't pay any dividends, right? So now let's pick down and see, we had a net income, therefore, right? If we didn't have any dividends and we didn't issue stock, then this had to come from retained earnings. And if the dividends were zero, the net income is going to be $161,000. Okay, let's check my work. Yep. So, if no additional stock was issued, our equity went up by $161,000, but dividends were paid, right? That means that the net income has got to be higher, right? Because retained earnings is net income less dividends. So this practice problem, and again, I'm not going to solve them out for you any further, but this practice problem is designed to have you kind of think through what all these mathematic relations are. Okay, so equity is retained earnings plus shareholder investment or stock, capital stock, and retained earnings is net income minus dividends. Right, so all of those equations together go into explaining the change in equity. The other thing I can tell you is, why are we having you do this? Why? It is not meant to torture you. When you are in business, right, you need to be able to extract information out of financial statements. And so if you have a net equity value that has increased over the course of the year, you want to know where that increase came from, because it makes a difference. Is it because they were profitable? Or is it because the owners were dumping their own money into the company to cover the losses? That matters. It matters a lot. Okay? So that's why we're having you do this one. This is basically more of the same. More of the same. So I'm not going to go through that one with you. Okay, this one starts getting at creating financial statements based on account balances. And so this particular example is actually quite straightforward. You just go through and pick the asset and liability accounts here, notes payable, etc. Stock and retained earnings, right? So you pick those and you pick up the balances. And the only issue here is that I would actually suggest, normally I'd have you do these in Excel first and then fill in the numbers. But in this case, it's just as easy to do it over here, fill in the values that you see, for instance, $50,000 for cash. And what else do we have in the asset? Land, $500,000 for land. Right, and then you fill in the total 550, etc. And then, excuse me, once you have gotten your total assets and everything in your liabilities and equity, which has to be the same as the total assets, right? So you solve this all out, get to the total liabilities and equity, which has to be the same here, and then back in to find the retained earnings for both years. So you just do that over and over again. You can do it. This is an income statement, and the key to this problem, what screws people up here, is recognizing which accounts belong in an income statement and which do not. Right? Income statement is only revenues and expenses. If you see the word expense, it goes in the income statement. If you see words or account names that are asset or liability accounts, for instance, land is an asset account, that doesn't go in your income statement. Okay. Retained earnings doesn't go in your income statement. That's a balance sheet account. Stock does not go in your income statement. Okay, so that's what this problem is about, is just learning to recognize what goes into an income statement. Again, I would leave you to that yourself. It's not that hard. Likewise, you need to make a balance sheet with asset accounts and liability accounts based on the account balances, recognizing which accounts go into an income statement and which accounts go into a balance sheet. And I think I will leave it here and do the last two on a separate video, which really go together. Okay. So thus far, this homework has been pretty repetitive, becoming increasingly complex in terms of the number of steps that you need to go through in the equations, but nothing too mind-boggling. It's just getting your head around thinking this way. Okay, so we'll do the last two in a separate video.